Krishnan ASV as well joins in to analyze Yes Bank's performance. Krishnan, hi. Let's take it one by one. Firstly, your take on how the quarterly numbers have panned out and the fact that there has been a sharp rise in provisions for bad loans. We've seen asset quality deterioration in this quarter as well. What's it telling you about what the next quarter is going to be like, considering markets always work in anticipation of what's going to happen? Do you sense that asset quality stress is going to remain for some more quarters to come?
Yeah, hi Aisha, many thanks for having me on the show. So, the two things we wanted answered at the beginning of this 2Q earnings would have been, number one, any clarity on the successor whenever that happens, and any clarity on whether there is a divergence that has been observed in the RBI's supervision cycle. To be very honest, this impairment in the 2Q FY19 of 630 odd crores, that lumpy slippage and the provisioning they have had to do, I think all these will be ignored. And the reason I'm saying that is, despite all that, their GNPA is 1.6%. Right? You are the best bank in the country, HDFC Bank, which is very close to about 1.4%. So GNPA by itself today on reported numbers should hardly be the problem on Yes. What matters is, even now, the two key things that we want answered are, is there a divergence risk? And if there is a divergence, how large can the divergence be? So you'd start working on scenarios there, right? And the second is there any clarity emerging on whether you have an internal or an external candidate as a successor? Right? So we put a lot of these scenarios together. We do believe that growth is going to be a challenge in this environment. I mean, capital is scarce. So to that extent, we believe that the kind of growth momentum that they have currently definitely will need to curtail itself. We are building in roughly about a 25% mid-20s growth for F19. But we have a buy on the stock. I think the earnings miss is a non-event. It was a sideshow. What matters is divergence, succession, and how do you raise the growth capital.
And, talking about, Krishnan, the succession plan, that is exactly what the street was looking out for. There doesn't seem to be much clarity on whether or not they even have a plan in place. Forget external or internal, how much have they really moved on this succession plan? Because it still pretty much seems, at least from what you can read from the body language of the management, that this is a big limbo. They don't have too much time. They've just got 2 months to go. And I guess before that, they will have to put the name forward, or 3 choices forward before the central bank as well. Do you think it's going to be a tough one? And that really has been a niggling internal issue?
So, generally, I think leadership succession is a slow-moving process, isn't it? You don't want to hurry up and in this case, obviously, you do have a clock ticking right behind you. So, Jan 31st being the end of Mr. Kapoor's tenure, it's very clear the bank has to work backwards. The board has already appointed, I think, Corn Ferry as a consultant there. So these things will take time. I think the broader issue to look at is, when will I start getting worried? If, say, for instance, if by early December, if you don't start getting feelers about the fact that Yes Bank board is now ready to send names, right? That's probably when you would want to worry. You don't want to worry at the end of October when the consultant has only been appointed in the middle of October.
Yeah, this is work in progress in that sense. But good to chat with you, Krishnan. Thanks so much for joining in with your take on Yes Bank. Comfortable though on valuations, that's the word coming in from the street, and that's Yes Bank. Went weak into its numbers, down about 3%, but let's see which way the stock goes. You can't really tell with this one. It's already cooled off from the recent rebound all the way up to 230 that it saw.